It's just before Easter, and I'm joined by Zak Mir, Chief Executive of Financial Media and Technology Investment Group, Lift Global Ventures, Epicode LFT. Hello, Zak. How are you today?
Doing very well. We've just raised the minimum £2 million that we were looking to raise to lift on the Aquis market. Given the Omicron and the inflation and the Putin and other aspects like that, getting to the particular milestone is all the more sweet.
It's an achievement in itself, as you say, given the markets we've had thus far this year. So can I just ask why the Aquis market and not AIM?
Well, I think the rules keep changing all the time, and even on Aquis, it went up from 700,000 to 2 million. So raising 700,000 is rather easier than raising 2 million. Yep. On AIM, I think the latest is that you can't be on there unless you've got 30 million as a sort of valuation or a market cap. So Lift was always going to be on the Aquis market. It's cheaper to list on the Aquis market. And I suppose the other point is that if you can get your story out and you can get your message out, I think on Aquis, in fact, let's say with fewer amounts of share purchases, you probably get a greater bang for your buck or your share price. So somebody buys £10,000 of shares on AIM, it won't make a dent, but somebody buys 10,000 on Aquis and might actually move the price. So it is a good challenge or a good opportunity for Lift to, I suppose, practice what it preaches. We're obviously both of us are in the financial communications area. One of the challenges is to communicate the Lift message clearly and in a positive way, and so that's hopefully what we'll do.
Excellent. Okay, so we're about 2 weeks away from the IPO now. Can investors still participate?
Yes, the door is still open. We got up to 2 million, but obviously, if Elon Musk wants to turn up and buy 9.1% or whatever he did of Twitter, I wouldn't stop him. So the attraction of getting in now, just before the closing date, which will probably be 3 or 4 days before we actually list, would be that if you're in the IPO, you will get a 1/3 warrant at 6p. We're listing at 3p, but there's a 1/3 warrant at 6p, i.e., for every 3 shares you buy at 3p, you'll get one free one in the form of a warrant. So a bit of a kicker there. If Lift gets off to a good start and it goes up to 10p or something like that, you'll have a little bit of a bonus there. So
that's very attractive.
That would be nice. And also, I think that as opposed to the people who invested in the seed round last summer or started investing in the IPO a couple of months ago, now with April the 29th, you actually have a visible date and you know how long you'll be sitting on your money or needing to sit on your money, which I think for a lot of people is a bonus.
Indeed. Well, of course, we've seen Aberdeen Asset Management splash out a cool £1.5 billion on Interactive Investor. Is this a consolidation phase opportunity in the financial media sector that you're seeing?
Well, I think the 2 points from that, I remember working on Interactive Investor 20 years ago when it was just a website. And what they did after with that, they added all the bells and whistles, so you could trade through them, you could buy pensions, you can do almost everything you want to do, probably book a holiday. So from a single website, everything came out of that, and it was sold for 1.5 billion. The good news is that I think with Lift and the space it's in now, you don't have to wait 20 years. For instance, one strategy could be that Lift buys a website, then it buys a digital communications hub, and then it buys, let's say, a trading platform, and then you have 3 synergist businesses. And I think the value in Lift would be to buy synergist businesses, which then you have economies of scale, and then you also have each part feeding off the other. So I don't really want it to be a scattergun thing, but obviously at the stage before we list, the targets and everything else are up in the air. You're not allowed to sort of reveal or indulge in that kind of targeting until you list. So hopefully by the summer we'll have done our homework and our DD, and we'll be able to choose the first target.
That's a pretty compelling rationale. I did that myself with Share Crazy many years ago, put a dealing platform against a financial bulletin board, and the rationale is pretty compelling. So I'm sure that will be very successful. So let's go on to the board now. You've assembled a very impressive board. You've got City veteran Paul Gazzard in as chairman, and of course your financial director is Tim Daniel, FD and non-exec. Do you expect to bring other board members in at this point?
I think that at the moment, they've, as I was alluding to, I mean, they've got this this project, at least the IPO, over the line, which I think, if you can operate in this environment, you can probably do anything. So that is full credit to them, and Tim especially has been very helpful on the day-to-day stuff. I suppose I'm a bit more chairmanly sometimes, maybe if only in age. So he's really clued up in all the rules and regs, which these days are obviously very, very numerous, and you need guidance on. So that's worked very well. Paul Gazzard, everybody sort of knows him in the city, and I wanted somebody with city experience, not just my own, financial market and maybe sort of financial media experience. So I think it's quite a well-rounded board. If we get somebody in, obviously we want them to bring something new to the party, like Elon. I'm sure we could give a bit of publicity or something like that. But otherwise, it's a rounded team, and I'm very happy with it. And I think the main thing is really to get the targets and the strategies right. We've seen, you see on the stock market, lesser companies getting their strategy right and more not getting it right, or just sort of treading water. And I think after a 30-year lead-in time, I would like to be in the good corner rather than any other corner, and that's why I chose Lift to be in an area which is, I've known for so long. I mean, so it's it is that 30 years plus experience as a broker, as a a blogger, journalist, interviewing companies. It's one of those things when you interview a CEO for the first time. You sort of in the back of your mind, you almost make a decision within the first 10 seconds. I'm sure you do the same thing yourself.
Yes, I have.
Yes, and it's. I actually said that to Alan Sugar, because I interviewed him once, and because with The Apprentice, the series lasts about 3 months. So I said, Alan, the series lasts 3 months, but surely when you meet somebody, within like 5 seconds, whether they're a winner or a loser. He said, well, no, in some cases it takes longer than that. He's a very well, it wasn't actually a very diplomatic answer, but you know what I'm saying. So getting back to the point, the thing is to get it right and progress Lift, hopefully over the next year or so. Okay,
so the company comes to market. What are the immediate plans after float? And I appreciate it's harder to articulate what you're going to do in terms of investment, because it's a price sensitive matter for all those concerned. And also, just following on from that, where do you see Lift, say, in 1 year's time?
I think by that time we'd have the core of our investments, and whether it's a synergist trio or 4 companies or 5 companies, I wouldn't expect it to be more than that. I think the market doesn't really, when you have a sort of scattergun approach, market doesn't appreciate it and tends to value at the lowest or the worst investment you've made. So ideally, some kind of a synergist series of investments, or obviously the best value opportunity we can find. I would like it to be a company which was rich in revenue rather than being a blue sky technology play. I think the market doesn't like pure blue sky. Blue sky tends to become a binary bet, which some punters like, but most people don't. So the idea of revenue, maybe dividends as quickly as possible, depending on what target we buy, that kind of thing. So it's really trying to have a reason for people to be invested, almost for an income reason as well as a growth reason.
Of course, and presumably you've identified your first investments and acquisitions.
No, well, according to the rules, you can put your feet up until the day of the IPO, the day of listing, and then the work starts in terms of finding those targets. So you're safe. You're safe for another couple of weeks, Alan. I won't be knocking on your door trying to make any acquisitions.
That's very good to know. Okay, so from an investor standpoint, then shareholders in the company, once the company has floated, what sort of value inflection points do you expect to deliver for shareholders in the months after the float?
I think that the obvious thing is that you make an acquisition that people appreciate, and then ideally there's revenue in that acquisition, or it's close to revenue. And then obviously further down the line, it would be the sale of the asset or assets. But I think the ideal goal is that you would have, as I said, 2 or 3 synergist investments, and that would create the value really. So that when you add the PR to the trading platform, or the website to the trading platform, that kind of thing, then that creates the value, because they feed off each other. But as I said, it's early days yet. The targeting really starts once we're on the Aquis exchange, and I think I would like to show that we can be a company that will give a decent return on Aquis and be an active market. And I'd like to do a lot to promote lift in that way, to create the liquidity and the interest, because I think a lot of CEOs almost say that they sort of finish almost once they get listed, and they sort of go to sleep. And I don't think this is going to be the other way around. So we're going to really try and communicate and get the message out.
Excellent. So Lift is very much going to hit the ground running after the IPO. So shareholders should be in for plenty of excitement in the coming months. Well, Zak, it's been good talking to you. We wish you every success with the IPO. Thank you once again for joining us today.
Thank you.